Hello everyone, this is Dr. Colby Wright. I am a finance professor in the Marriott School of Management here at Brigham Young University. Today and throughout all of the videos that you'll be seeing during the course of this semester, I will be speaking on behalf of all of the finance faculty, but more particularly, I'll be speaking on behalf of all of the finance professors who are involved with teaching ManEc 453, which may someday become Fin 453. What I would like to do today is walk you through some information about the class itself, about ManEc or Fin 453, and then I want to spend a little bit of time being more specific about what these online modules are and what they're attempting to accomplish, and then we're actually going to work into our first assignment associated with this online module number 1. So as you can see here, I have a few PowerPoint slides to show you. I certainly don't have many, so we'll make this as brief as we can, but I think this is the most effective way to convey the information. First off, wanted to try to paint the vision for everybody regarding the class. So you can see up here at the top we have ManEc 453, and we have it split into two branches. So we have money, banking, and capital markets. This is the traditional content of ManEc 453. This is what all of your friends and relatives who have taken the class previously would have received. But we also now have a new branch as a part of ManEc 453, which is Excel Training and Review. We have collectively decided as a finance department that for Fin or ManEc 453 would be a good vehicle through which we could try to give you new Excel skills and give you an opportunity to practice some Excel skills that you already know. So we have these two overarching objectives for the class. One is to present the traditional money banking and capital markets class, and the other is to give you some Excel training and review. The money banking and capital markets portion of the class will be executed in class, meaning your textbook, your in-class lectures, and your tests, quizzes, and assignments that we talk about in class, those will all relate to money banking and capital markets. This left side of the hierarchy right here represents the traditional money and banking class that we've offered for many, many years here at BYU. The new branch, the Excel Training and Review, is largely going to be accomplished online through a set of 11 online video modules that will have corresponding Excel assignments that will represent the deliverables associated with those online video modules. Since you'll be hearing a whole lot more about this side of the hierarchy in class, I don't need to talk about that here. What I need to talk about in this venue is what's going to happen this semester over here on the Excel Training and Review. First off, let me continue to set the stage a little bit. You may be coming in thinking that the topics covered on the money banking and capital market side will line up and be wonderfully congruent with the Excel Training and Review. Turns out that's not necessarily going to be the case. There will be some overlap between what we talk about in our money banking and capital markets class and the Excel Training and Review. However, most of what we do in the Excel Training and Review will be actually outside of the umbrella of money banking and capital markets. We'll spend a lot of time talking about corporate finance and investing principles in the Excel Training and Review. Mostly, we don't want you to misunderstand. We don't want you coming in thinking that the Excel assignments are somehow going to supplement or augment or illuminate topics covered in class. The truth is you'll get largely distinct and separate topics in the Excel Training and Review, but things that we think are very, very important to your futures. In terms of our objective for the Excel Training and Review, our primary goal is to review, teach, and to invite you to apply important principles and models from financial theory in order to give you opportunities to enhance your proficiency in the following Excel skills. We want to give you some helpful add-ins to expedite the data downloading process. We want to help you improve your basic Excel functionality and hotkey use. We also want to give you some more practice with regression analysis, pivot tables, the solver function, and then we want to introduce you to array and matrix functions and give you more practice with Monte Carlo simulation. In order to accomplish that, we have 11 online modules that will be posted throughout the semester. The first one you're viewing right now is the Introduction and the Data Downloading module. So in just a few minutes here, I'm going to give you some data downloading tools, and then I will give you an assignment and talk about what's deliverable from the assignment. The second module will be on identifying market anomalies using pivot tables. This is primarily an opportunity to use pivot tables and get more comfortable with them. The third assignment will be a discussion of continuously compounded returns and the basics of return distributions, and you'll get a chance to calculate some basic return distribution properties. The fourth module is risk-adjusted returns, and we'll explore CAPM and Fama French and Carhart, those models with a little bit more depth than perhaps you've done in the past. The fifth module will be simply a refresher on the discounted cash flows model of how to value a company using that particular valuation model. The sixth module will take the DCF model that we build in video 5 and we will add simulation analysis to it. The seventh model will teach you a valuation model that you probably have not been exposed to. So in the seventh video module, you will learn the residual income model or the residual earnings model, and we'll build a basic model in that video. And then in the eighth module, we will go ahead and add simulation analysis, much to what we do here in module 6. The ninth online module is going to be simply a matrix algebra primer. Most of you have not taken linear algebra. It's not required for the program. However, it is very helpful, especially in trying to form the efficient frontier, which is going to be our objective at the end of the course here. So we'll introduce you to matrix algebra and give you some practice, and then in video module number 10, we're going to learn how to optimize portfolios that have 3 or more assets using matrix algebra. And then our last online video module is going to leverage on these 2 previous modules, and we'll map out the efficient frontier and the capital allocation line using 7 different assets. So that gives you a roadmap for where we're headed. That tells you what the objectives are. Now, a disclaimer. We realize that we are trying to balance 2 competing forces. On the one hand, we want to make this experience as rigorous as possible, not because rigor is in and of itself desirable, but because the more rigorous we can make it, the more helpful it will be for you. So on the side of trying to make it rigorous, we want to use real-world data, and we want to use models that are moderately complex, and we want to expose you to Excel skills that are complex. However, on the other side of the scale represent the constraints that we face. The constraints would be, first and foremost, this is a 3-credit-hour class. We're asking a lot. We're basically giving you a traditional money and banking class experience and adding an entire online supplement to that. And so we're trying to be sensitive to the fact that it's only a 3-credit-hour class. We're trying to make the workload commensurate with that. We also understand you have other coursework that's important. We don't want to give you so much to do in this class that you have to ignore and neglect responsibilities in other classes. And then we also understand that you have other important responsibilities. Many of you have civic responsibilities, religious responsibilities, and family responsibilities. So throughout the online modules, we're going to try to balance these 2 competing forces of rigor versus constraints. You will see moments where we shortcut things. Please understand, when we've made decisions to shortcut things, it's because of this balance that we're trying to strike right here. With that, let's dive into module number 1. The goals for module number 1, and when I say the goals for module number 1, I mean the actual assignment associated with module number 1. We want to give you 3 useful data downloading tools. We're just going to provide these for you. They're available online free of charge, although they do take a little bit of digging to locate them. We're going to provide them and just try to show you how to use them very quickly. And then we're going to use this 3rd add-in right here. These are actually files. The first 2 are files. The 3rd one is an add-in. We're going to use that add-in to download some data related to exchange-traded funds and exchange-traded notes, and we will create a refreshable ETF, ETN mispricing tracker. Let me try to give you the vision of where we're headed here. What you're going to turn in will look something like this. This says IV price gaps in ETNs, but it could be ETFs. It works either way. So exchange-traded notes and exchange-traded funds have an underlying value. For an exchange-traded fund, it's called a net asset value. For an exchange-traded note, it's called a redemption value. We could refer to both of them as the indicative value. Sometimes this gets called the intraday value. But just know that IV means indicative value, which represents net asset value for an ETF, and the redemption value for an exchange-traded note. What's interesting about exchange-traded notes and exchange-traded funds is that we can see quite clearly what the value of the funds or the notes should be. So we can figure out what the value should be, and we can compare it to what the actual market price is. We can then spot any mispricing that might exist, and then we can recommend a short or long position based on the mispricing that we observe. Of course, you'd always want to look at the bid and the ask spread and the volume to make sure that you actually could take advantage of any mispricing that you misspot. And what we'll discover, not surprisingly, is that when we see mispricing, there's probably going to be liquidity constraints or a wide bid-ask spread that would likely negate any potential gains. However, it's going to be a very useful tool because you can refresh it. You'll be able to hit the F9 button and the whole thing will update with the most recent data. So, and related to this assignment, what you'll have to do is basically submit an Excel file that looks similar to this. It must be completed individually, must be submitted via the Learning Suite, and I'm going to ask you to choose 5 different ETFs or ETNs than what I've used, and please refer to your instructor for the due date on the assignment. Having said that, that's all the PowerPoint slides that I have to show you. Let me first off introduce you to these downloading tools. The first data downloading tool that we want to make available to you is a file that contains a macro that allows you to very quickly import daily security prices from Finance Yahoo. Now, in some of your other classes, specifically 409 and 415, you'll gain exposure as to how you can import data from Bloomberg, which is very, very helpful. Bloomberg is a wonderful data source. It's also very expensive to have a Bloomberg terminal, and so it's not always going to be possible for you to have a Bloomberg terminal and to download data from Bloomberg. So in these online modules, we're going to focus on pulling in data from free sources that you could always have access to as long as you have the internet. So let me take you to this first file, and I have it saved, and the title of the file is Yahoo Historical Data for Multiple Stocks Daily Data. When you pull it up, you can see it's a very simple looking file, and I should say right out of the gate that I did not create this, so I can't take credit for it. I found this on the internet. But what it allows you to do is you can put in a whole list of ticker symbols. So let's assume, for instance, that you're interested in Home Depot, maybe Disney, Ford, and maybe Microsoft. So then what you do is you put in a start date and an end date, and they can be different. So maybe for Home Depot, we want to go from January 2nd of 2000 to June 30th of 2012, and we'll have some different dates for these other securities. Then all you have to do once you put in the ticker symbols and the dates is you just have to go up here to the View tab, select the macros, and look at macros only in this workbook, and you'll see there's a Get Yahoo Finance macro. Run the macro, and you can see it does this very efficiently, very quickly, and you can see what it's done is it's pulled in daily data for all 4 of the securities that we requested. Just to make sure that we're comfortable with what we've done, for Home Depot we should see data from January 2nd of 2000 through June 30th of 2012. You can see there is the last trading day in 2012. You can also see that the first day that we've brought in is January 3rd. All that means is that January 2nd was probably a weekend, as was June 30th of 2012. So a great fast tool for scraping Yahoo, bringing in daily data. The second data downloading tool that we want to show you and make available to you is very similar, except this data downloading tool will actually bring in monthly security prices. It's labeled almost the exact same, Yahoo Historical Data for Multiple Stocks Monthly. So we do the same thing. What we do is we put in the ticker symbols, we give it a start date, we give it an end date. So we could put in, again, Home Depot, Disney. We could do a mutual fund, Vanguard 500, VFINX. Give it dates, and then we do the exact same method. We just go up to the View tab, select macros, and we run this macro. And we run this macro. When we run it, it pulls in the data. Now, the only thing I need to show you that you might be confused about if you hadn't seen it is this. This row right here says that that is the adjusted closing price, meaning the dividend and split adjusted closing price for June 1st, 2012. Let me take you to Yahoo Finance, and let's go ahead and put in VFINX, which is the Vanguard 500 Index Fund. Let's look at historical prices. This is supposed to be the price on June 1st of 2012, at least according to the data here. So I'm just going to look at the data because I need to show you something very specific. So I'm going to look at June 1st of 2012 through June 30th of 2012. And here's what I want you to see. That closing price of $124.95 is actually the price on June 29th, not on June 1st. This is welcome news. This is good news. What that means is that this tool that we've given you is scraping Yahoo Finance and giving you the price at the end of the month. So even though it says June 1st, it really just means the closing price at the end of June. So two very helpful tools just for importing data from Yahoo very quickly and efficiently. The next one that I want to show you is another way to import data from Yahoo, but also from a lot of other different sources. It's called the SMF add-in for Yahoo Finance. So this is a tool that we want to actually put into our Excel program on our computers that's going to allow us to incorporate formulas that go out and scrape the web for some useful data. In order to do this, you need the folder. And so we're going to make available to you a folder that has the SMF add-in. And you can see inside of that folder it's going to have a few files. What you need to do is copy that folder, and then you need to go to the local disk drive and specifically the program files on the C drive. You need to paste that folder in. Now you can see I already have it because I've already done this. Once you paste that folder into the C drive, what you need to do is open up Excel, go to File, Options, and once you've gone to the options, go to Add-ins. And then once you go to Add-ins, down here at the bottom, you go to Manage the Excel Add-ins. And what you have to do is you have to browse to find it. I already have it, you won't. So you browse by going to the C drive, to the program files, opening up the SMF add-in, and clicking on that file right there, and you click OK. When you do that, you will have now just included the SMF add-in into your Excel file. The SMF add-in gives you a whole set of formulas, and one of the most powerful and easy formulas to use. All you need is a ticker symbol and a reference number, and you can get some output. So let me give you an example. What if we were interested in Google? And look at all of the things that you can pull in from the web using this SMF add-in. So you can get all this data from the Microsoft network. So for instance, if you wanted to get the 52-week high for Microsoft, that would be reference number 34. So all you need to do then is this, equals RCH, and now you can see we have a plethora of formulas that are part of this add-in that we can use. We're going to use RCH get element number, and all you need is the ticker symbol, the reference number, hit enter, and it's going to automatically go out and grab the 52-week high from MSN. It's not just restricted to MSN though. You can see that it actually will pull from Yahoo, it will pull from ETF screen, bar chart, some other great resource from Google Finance. So not all these variables are defined, but you can see that they have it programmed to handle up to 20,000 different data points that you could go and pull from the web using this SMF add-in. We're not actually going to use the RCH get element number. We're going to use a different formula. So there's actually another formula that's called RCH get Yahoo quotes. And similarly, you need the ticker symbol, but the syntax gets a little bit different for this. So let me show you the syntax. So here's how the syntax works for the RCH get Yahoo quotes. Equals RCH get Yahoo quotes, put the ticker symbol in, and then you just find the data code down here in this table. Don't worry about server ID. We are going to worry about refresh though, because in the refresh portion of this formula, we can put in this option right here. If you put in now with 2 parentheses, it will make it so that you can hit F9 and automatically refresh all of these formulas. So let me give you an example of this. What if we wanted to use Yahoo Finance to get just the last price that this stock traded at? You can see the last trade price with the price only is L1. So what we would do is R equals RCH get Yahoo quotes. We would identify our ticker symbol. We would put in L1. Remember, we're going to skip the server ID, so 2 commas, and then we put in this now option, so now followed by 2 parentheses, which makes it so that this will automatically refresh when we hit F9. When we hit enter, you can see that it gives us, in fact, the latest trade price for Google, and again, if useful. So what we want to do is we want to use the RCH get Yahoo quotes function to create a refreshable tool that will keep track of ETNs and ETFs to help us spot any mispricing that might exist out there. But we also want these formulas to give us a warning. We want to be able to see if perhaps there's a bid-ask spread problem or a liquidity constraint that might prevent us from actually taking advantage of any mispricing that we see. So let's go ahead and try to put this spreadsheet together. Alright, so you can see I've already set up a template for us. I assume that everybody's comfortable at least putting in those column and row headers by themselves. What I want to do is dive right into the formulas. I've already included the ticker symbols for 5 relatively common exchange-traded funds and exchange-traded notes. We have the S&P 500 exchange-traded fund known as the SPDR. We have the Diamond exchange-traded fund, which just tracks the Dow Jones Industrial Average. We have GLD, which is an exchange-traded fund that invests people into gold. And then we have 2 exchange-traded notes, both of them linked to the VIX. VXX is just a simple long play in the VIX, and TVIX is a double or a leveraged position in the VIX index. So what we want to do is we want to get the price from Yahoo. For every ticker symbol, we also want to get the corresponding indicative value. And then we want to see, are there any differences between the price and the indicative value? We'll calculate that in terms of dollars, percent, and absolute percent. In this column, we'll come up with potential trading strategies, whether we want to do a long or a short. Here we'll identify the bid and ask, and then we'll look at some volume. Again, over here, we're just analyzing potential constraints on our ability to actually take advantage of any mispricing that we identify. So let's get right to it. We want to do RCH get Yahoo quotes. We want to use the ticker symbol in B5. We want L1. Remember 2 commas and then the now option. That's going to make it refreshable by hitting F9. And that gives us the most recent price for SPY. We also want to get the indicative value for SPY. So let me take you to Finance Yahoo and show you how the nomenclature works. This is the SPY, the SPDR Exchange Traded Fund. If we want to see the indicative value, what you have to do is caret ticker symbol -IV. That's going to get you the indicative value. So what we need to do in the spreadsheet is we need to create a new ticker symbol for the indicative value. The way we're going to do that is by using the concatenate function, which means simply to join together. Concatenate means to join together side by side. So what we want to do is first off have a caret. We want to join that up with the ticker symbol and then -IV. Remember, any text has to be inside quotation marks. Now, once we have the ticker symbol, we want to actually go and get the indicative value, again using the RCH get Yahoo quotes. This time the ticker symbol will be right there, but again we just want L1, 2 commas, and the now option, which is going to allow us to refresh it with F9. So there's the market price, there's the indicative value. Let's take the indicative value minus the price, and we can see it's 11 cents. Let's figure that as a percentage of the indicative value, which is not much. And let's get the absolute value of that percent. Let's come back to this column in just a second. Let's talk bid and ask first, and also volume. In order to get the bid, we can also use RCH get Yahoo quotes. Let's go grab our SPY ticker symbol. Now we want B, which stands for bid. And again, give it the now option. You can guess then that to get the ask price, it's going to be equals RCH get Yahoo quotes. There's the ticker symbol. Now we want the ask with 2 commas and again the now option. Pretty tight bid-ask spread. That's to be expected. This is a highly traded instrument, as we will see in just a second here. Getting the average volume, I don't off the top of my head remember what the data tag is for that. But we can look over here and we can figure that out. You can see that average daily volume is A2. So we come back over to the spreadsheet. We use RCH get Yahoo quotes. Again, we grab our ticker symbol. This time, however, we want A2. 2 commas, the now function, and then we close it up and we have our average volume. And we can also get the latest volume for today's trading session by doing RCH get Yahoo quotes, back to our ticker symbol. This time we just want V, which stands for volume. Again, we give it the now option. And you can see that today, so far, 85.8 million shares have traded. The nice thing is with what we've done here, since we've put the now option into all of our formulas, we should be able to hit the F9 button and get a refresh. And you can see we did get a refresh on the data there. So every time you hit F9, all of this should update, which is very, very helpful. That's the whole point. We want a refreshable tool at literally the touch of a button. Let's talk for a second about this threshold. What I want to do is I want to identify absolute mispricing that exceeds a certain threshold and signals to me that there might be an opportunity to make a trade. I've set my initial threshold at 1.5%. What I want to do is have a recommendation pop up, for instance, neutral, short, or long. You could do neutral, buy, sell. It doesn't really matter to me what you choose to do. Now, the if-then statement would look something like this. If the absolute mispricing exceeds the threshold, then we want to do something. If that mispricing is negative, then we want to short it because that would mean that the price is too high. Alternatively, if it was not negative, we would want to take a long position. And closing up the initial if-then statement, if the absolute mispricing is not greater than the threshold, then we would be neutral and not want to assume any position. I'm going to lock in the I4, make that an absolute reference. And now we have a neat little row of formulas that give us a potential trading signal, but then also we have information that might suggest caution, although if you look specifically at this exchange traded fund, there really isn't much mispricing. It's less than it's about a half a basis point. We wouldn't want to do anything. There is no opportunity to make money. There is no mispricing. That makes perfect sense because we've got a ton of volume, very actively traded security. Now what we're going to do is we're going to drag this formula down for the rest of our ETFs and ETNs. It's going to take just a second. Understand that your computer has to calculate because it's scraping the web, going out and pulling in data. So now it's going to take a little bit of computing time for it to execute. And you can see it did in fact take a little bit of time for the computer to process that data. And you can see that there's not a ton of mispricing identified with the ETFs and ETNs that we've included in our initial sample here. You can see that most of the ETFs and ETNs that I've included with the sample have quite a bit of trading volume, which explains why we see very tight and narrow bid-ask spreads, and that also probably helps to explain why we don't see much mispricing. A couple of other things that we might want to do is we might want to create some color coding to help give us some indicators that would be helpful, and we might also want to put a macro in that would sort things for us. For instance, over here we might want to do a conditional formatting. Just create a new rule. Format only cells that contain a specific text. And we could say, well, if it says short, maybe we want to give it a color code of red. We could do another one. Again, conditional formatting, new rule. Format only cells that contain specific text. Long, and we might want to make this green. Click OK. Now, no color is popping up because we don't have a long or short recommendation here. Over on the volume, we might also want to color code, and maybe I only want to buy or sell ETFs or ETNs that have sufficient trading volume. So for average trading volume, we could do another conditional formatting rule. This time, format only cells that contain a cell value greater than, and we could say 500,000 shares, and maybe we just want to color that yellow. And you can see all of these are in excess of 500,000 shares. So now what you've created is anytime there's mispricing that rises above our threshold in absolute values, we're going to get either a long or short recommendation with some color coding to help. And then we can look over here and see if it has adequate trading volume for us to consider taking action. Last thing we might want to do is create a macro that just sorts all of this. So we could highlight the data first, except for the numbers over here. So we could highlight the data. We could go to View, Macros, and we could record a macro. And maybe we want to give this, maybe we want to call it the sort macro. And maybe we want to give it a shortcut key of capital S. And we click OK. At this point, we would sort it. So you can go up to Data, Sort. We would want to sort based on absolute value from largest to smallest. Click OK. You can see that it's resorted for us. Go back to View, Macros, stop recording. Now, what you've created is a very useful spreadsheet that will refresh anytime you hit F9. And what it will do is it will pull in all of this data from Yahoo. And then if you hit Control-Shift-S, it will resort the data to show you the largest absolute mispricing down to the smallest absolute mispricing. So let's give it a shot. Let's hit F9. And when we hit F9, we see that it recalculates. Now we hit Control-Shift-S, and it goes through the macro and resorts for us. One last thing that you could do is you could include a button if you didn't want to use the hotkey in order to do the sorting. So we could put a button in, and maybe we could even do this. We could go to our developer tab, which you may have to add, which is not hard to do. If you don't have the developer tab, you just go to File, Options, Customize the ribbon, and over here you would have to click on the developer tab. Go to the developer tab, insert a button, click OK, and you can even assign the macro to it. Click OK, and then you could write the sort right here. So now the F9 would refresh. Click the button and it resorts for us. And you can see we now have from highest absolute mispricing to lowest absolute mispricing. Now, we could swap out, maybe instead of GLD, maybe we want to do UGLD, which is a leveraged product. And instead of diamond, maybe we want to do GAZ, which is an exchange traded note. And now let's see if it works again. We hit F9 for the refresh. We get the refresh, we hit the sort, and we get the sort from highest absolute mispricing down to lowest absolute mispricing. We have a recommendation, maybe think about shorting. However, we don't have a ton of volume. Bid-ask spread isn't terrible, so there might be an opportunity for you to execute a short position on a few thousand shares if you're lucky at this price, with the expectation that at some point it would drop down to its IV. So this is your first module. This is the deliverable. You need to create an Excel file that looks like this, that has all of this functionality using the RCH get Yahoo quotes formula. You can only do that if you have the SMF stock quote add-in. So get the SMF add-in, and then you're going to use the RCH get Yahoo quotes formula. I want you to do everything you saw me do in this video. Make all of this refreshable with the F9 button. Let's create the simple macro so that we can click a button and sort it. And you need to do this individually. It needs to be submitted via Learning Suite, and you need to pick your own ticker symbols. So we want to see 5 different ETFs or ETNs. Best of luck with the assignment, and we'll see you in module number 2.